So, you've just picked up your annual financial statement from the accountant, and it's thick with numbers and terms that might be in another language. But what if these pages are the secret map to your business success? Imagine unlocking the secrets held within the numbers of your financial statements, finding the path to enhance your business strategy and financial health. Today, we will help you turn the abstract into the concrete. Hey there! If you're watching this, you're probably holding on to your financial statements, wondering what all these numbers mean and why they matter. It's perfectly normal to feel overwhelmed, but paying attention to these documents is crucial. They are more than compulsory compliance. They are your tool for mastering your business finances. Let's break it down, starting with your balance sheet. Fully understand your assets. Whether it's cash, inventory, or equipment, knowing what you own helps you measure your company's productivity and operational capacity. Toggle this number against previous periods. Is it growing? If not, why? Next up are liabilities and obligations like loans or accounts payable. Compare these to your assets to assess your financial stability. Are your debts manageable, or are they suffocating your business growth? And finally, equity. This figure represents the owner's value in the business. Watching this grow can be immensely satisfying and indicate positive business health. So now that you know what each of these is, what can you do with them? Starting with a balance sheet, let's focus on current assets and current liabilities to calculate your company's working capital. Simply subtract current liabilities from current assets. Imagine your current assets are $200,000 and your current liabilities are $150,000. In this simplified view, your working capital is $50,000. This number indicates how much liquidity your business has in the short term to cover obligations. The higher, the better for daily operations. Now, on the debt-equity ratio, divide your total liabilities by your shareholder equity. Say your liabilities are $400,000 and equity is $200,000, leading to a ratio of 2. This indicates you're heavily reliant on debt for financing. A lower ratio, less than 1, usually signifies a more financially stable business. Moving to the profit and loss section. Start with your revenue. It's your starting line. How has it changed? Are there peaks or troughs? These can indicate market trends or the success of your marketing efforts. Dive into the cost of goods sold (COGS). They tell you how much you spend to generate your product or service. Is this cost increasing? If so, look at your supply chain or pricing strategy. Expenses can be tricky. They eat into your profits but are necessary for operation. Are there expenses that can be reduced without impacting product quality? Lastly, the net profit. Net profit is your takeaway. It's the result of your business operations. If this number isn't where you want it to be, each earlier number we discussed might tell you why. So, let's elaborate and show you how they interact. Jumping into the profit and loss statement, let's decode your gross margin. If your revenue is $500,000 and COGS is $300,000, subtract COGS from revenue and divide by revenue again. You end up with a gross margin of 40%. A higher percentage here means more efficiency in turning materials and labor into profits. Next, the net profit margin. With a net profit of $60,000 and the same revenue of $500,000, divide net profit by revenue. That's a 12% net profit margin, revealing how much each dollar earned is actual profit, after all expenses. Now, I bet some of these points sparked questions or thoughts. This is great. Drop your questions in the comments below or send them via our social channels. We're here to dive deeper and unravel these complexities with you. And don't worry, this is just the beginning. We're planning more short videos to explore each segment mentioned today. Subscribe and stay tuned to demystify each element of your financial statements, one video at a time. Understanding your financial statement isn't just about numbers, it's about unlocking the potential of your business. Use this information wisely, and remember, you're not alone in this journey. We're here to help guide you through it. Keep those questions coming, and let's push your business forward together. Thanks for watching, and see you in our next video.